Hi, you're watching Managing Money with Money Control. I'm Sakshi Patra. Well, in the last month or two, several banks have actually and finally come out with home loan rates that are linked to the external benchmark rates. The biggest advantage of this type of loans is that they move in tandem with the movement of the interest rates in the economy. Joining us in the studio today is Mr. Raj Khosla, founder and managing director of mymoneymantra.com, a pan-India consumer financial products marketplace, to explain to us what will this mean for borrowers like you and me. Welcome to the show, Mr. Khosla, and thank you so much for joining in. Now, first up, to be able to understand for the viewers' perspective as well, how many banks have started to actually move towards this repo rate-based loan rates, and also what are the kind of interest rates now they're offering?
First of all, thanks, Sakshi. Thanks for having me on. Such a pleasure to be with you. Let me just rewind the tape a little bit. Up until the 1st of April earlier this year,
right,
the Reserve Bank was pushing all banks to link their lending rates to an external benchmark.
Absolutely,
absolutely. And it's only, and guess what? It's only today or yesterday the announcement came by Reserve Bank where they made it compulsory for all banks to link their floating lending rates to an external benchmark.
Correct.
And this is great news for your viewers, really, because it obviously means more transparency, for all of them.
Absolutely.
But yes, to answer your question with respect to, how many of them, in fact, when the RBI was pushing all banks to link their lending rates to an external benchmark, the PSU banks have now taken on the mantle first and foremost.
Right.
So State Bank of India, for instance, is at 8.05, Bank of Baroda, IDBI Bank, and banks such as these are all between 8 and 8.3%.
Right.
The only foreign bank, for that matter, which has linked its lending rates to an external benchmark is Citibank.
Okay.
And they've linked it to TBLR, which is really Treasury bills lending rate.
Absolutely.
And that's at 8.5%.
All right. I also wanted to understand what is so special and different about the repo rate linked loans, because earlier we've also seen the MCLR based loan rates that all the banks used to follow. So what is the difference?
The difference is really MCLR is exactly what it sounds like. It is basically marginal cost lending rate, which means that each bank calculates its own marginal cost and then prices lending on the basis of its own calculation, plus 2%, plus 3%, like that. As when it's linked to an external benchmark, it's really good news for all borrowers, because it's always transparent and they always know why the rate is moving when it is moving.
Absolutely. So basically, when your loan rates are actually linked to the repo rate, whenever the RBI cuts or hikes the repo rate, your own loan rates will also move in tandem with that?
Absolutely, yes, they will move, and you will know why they are moving and how much they are moving by, as opposed to a certain opaqueness which may have come into play if there was, for instance, MCLR-based, movement in rates, because nobody knows how they're calculating the MCLR.
Absolutely.
Repo rate is a external benchmark which the RBI lets out, but actually the RBI is saying you can link it to any external benchmark as opposed to an internal one.
Sure.
Like I said earlier, Citi linked it to TBLR. So, but mostly people are linking to repo rate.
Absolutely. So I want to understand from the viewer's perspective and from the borrower's perspective as well, how should the borrowers really safeguard themselves whenever there is a hike in interest rate? Right now we are in the lower interest rate scenario, so everybody's comfortable right now because the interest rates are following. But there will be a time when all these interest rates will also start to move up.
They will start to move up. One way, actually, when prices of vegetables go up, you have to pay more for them. So there's no way of safeguarding and saying that I'm not going to pay the higher price. But yes, there are some safeguards, which all your viewers, should be following.
Yeah.
Such as, for instance, they should try to link their rate and take a borrowing, switch sometimes to a lower rate, and most importantly, find a bank which is able to link their rate to an overdraft facility.
Right.
Because like in life, there'll be some unpleasant surprises, but there'll also be pleasant ones, right?
Right.
Because, you will get some windfalls every now and then, in which case, the viewers are best advised to put the money in an overdraft facility, and basically the overall interest cost comes down for all for all the borrowers.
Right, right. I want to understand for all the home loan or the existing home loan borrowers right now, what should they be doing? Should they switch right now to those banks which are actually offering the repo rate loans? And like you just said, from October 1st onwards, it will be mandatory, or should they just stay put?
Well, between now and October, there isn't an awful lot of time. So
Yeah.
it's probably better to let the dust settle and then decide, if the rates are low, their own lender has reduced rates, in which case then there's not much point, in changing. So wait
Right.
till 1st of October is what I would advise.
Absolutely. There's one more thing that I wanted to ask you, Mr. Khosla. To protect and to safeguard all these borrowers, earlier this was actually decided that repo rate loans would either alter their interests or their principal components in a way that EMIs don't change too frequently. Is that also the case right now, when all the banks will be linking their repo rates to their loan rates to repo rates now?
Well, if there is a reasonably substantial difference, if it's a small variation, then it doesn't make sense to be changing calculations all of the time. And in fact, banks have their own policy. Once the rates change, will they reprice quarterly? Will they reprice yearly? Will they reprice monthly? So there's a bit of play there, But to go back to whether the amount of EMI will change, if there is a substantial difference in the rate of interest as charged, it is the borrower's prerogative to figure out whether he wants to change his EMI and keep his loan tenure constant, or he can carry on paying the same EMI, and then the loan tenure will either increase or decrease depending upon whether the rate had gone up or come down.
Right. And lastly, Mr. Khosla, I have to ask you about this thing as well. You know that there has been a lot of clamor from the government and from the RBI for a long time now for the banks to be cutting interest rates. We have seen in the last 4 or 5 times in the monetary policy review meetings as well that the RBI has actually slashed the repo rate by over 100 basis points, about 110, 120 basis points. But the same kind of reflection hasn't been seen in the loan rates which is being offered by the banks as well. Like if you see, there is a repo rate which is at around 5.4%, but all these, loan rates which you just pointed out at around 8%, 8.3%, 8.5%, there is still a huge gap. Will this, gap also reduce now from October 1st onwards?
Well, I don't think the gap will reduce, but certainly you would always know, it will be transparent. You would know what that gap is. Like you quite rightly point out that, repo rates have fallen 120 basis points, since, over the past few months.
Yeah.
And all of this benefit has definitely not been passed on, to the, to your borrowers, for sure.
Yeah.
Maybe 20 basis points, maybe 40 basis points, but it hasn't gone unless they were fortunate enough to have actually borrowed at a rate which is linked to an external benchmark.
Absolutely.
So that, this is always going to be, you'll always know.
Yeah.
If your question is that, do you think that because it's linked to to the repo rate, will the difference between the repo rate and the rate that you pay come down?
Yeah.
I don't think that's happening because every
So
bank
it
has
is not
its
falling
own.
as sharply to about 5.5% anyway.
Surely, never.
No. Okay.
Never. But you will always know what that difference is. When it was an MCLR based loan rate, you never knew, how many percentage points the bank was marking up when it was loaning you.
Absolutely.
So it's in the best interest of the customers, this, the linking.
Thank you, Mr. Khosla, for sharing all those valuable insights with us, with all our viewers as well. While in a falling rate cycle, this may be alluring for all the borrowers, but when the RBI starts to hike the interest rates, the repo rates as well, borrowers may not be too pleased, as lending rates will go up faster than under the MCLR regime, pinching the borrowers even more. With that, it's a wrap here, but do stay logged on to moneycontrol.com for more news and views on personal finance. Thanks for watching.